Good afternoon, everyone, and this will probably be the 8th or 9th welcome you've had, but it goes without saying, I want to thank John and the Operation Hope team, everyone here, everyone streaming in. It really is a pleasure and a privilege to be here with all of you and with my fellow panelists. It's been a mind-blowing day. What we're talking about, the content, it really matters. I'm going to go back and watch all these sessions again because there's so much that's been sparked. Anything that I knew before has been enhanced, if not taken to another level by the conversations today. And just to give you an idea about why this matters, and our topic today is striking the balance between innovation and protection. And I think just in the conversations alone, we realize why this is important. But my background primarily, most of my career has been in housing and mortgage. And if you think of the mortgage-backed security, right, that was new back in, say, the early 80s or so, and then less than 3 decades later. It worked for decades, but regulation didn't keep up. People didn't pay attention, and it tanked the national, if not world economy, and destroyed the lives of millions of families. And so striking this balance and doing it proactively, this all matters, and it's great to be here today and that so much attention is being given to this topic and what can really be a game changer. So with that, I'd like to go ahead and start our conversation. What I'd like to do, Kathy, stepping back for a minute, why are we here today? What the technologies that we're talking about, why are they so important? What can digital assets and crypto do for consumers and the national and global economies? And if you could touch on that, and then same with Tina and Ben, that would be great.
Now, we all absolutely have different perspectives on that. I think the interest in even this event demonstrates that there are a lot of people hearing about crypto, wanting to understand what it is. We have some terminology challenges in this space. Even calling it a currency raises all kinds of questions. Talking about the Terra Luna disaster that happened, frankly, is also a question of what is a stable coin. So taking a step back here, I really like to think about blockchain technology today and the stage that we're in with the early 90s and the internet. Commissioner Harris mentioned this morning Amazon, and certainly where Amazon went. But who knew at the time that Amazon was the stock they wanted to buy? Thinking about that, going back and saying, okay, how are we going to actually use this internet thing? It's everything now. It fuels every interaction we have with each other, with commerce and what we buy and how we buy, as you think about Web 2. And now we're moving to Web 3, and you've heard some descriptions around that. But back at the time, go back and say, okay, should I have invested in Google or Ask Jeeves? Should I invest in MySpace or Facebook? Today that seems fairly obvious to us, but that's essentially where we are with these different blockchains. And in fact, everything that's on top of that, the utilities, the applications, all the applications on our phones from, our trail apps that help me know where to go when I'm hiking, or all of the social media apps, all of that's built on top of this infrastructure. And so that's the ecosystem that will be supported by blockchain. That's why people are excited about it, but it does make it challenging now to think about where to invest, what to invest in. And so that's, I think, the moment that we're in. I'll at least say a moment on what I'm doing and what Solidus Labs is. We are a software company. We provide a service to these exchanges and to the digital asset trading world to watch for manipulation, to watch for fraud. It's something that, again, still happens. Fraud still happens in traditional markets, but the requirement to look for it, to prevent it, to have policies around it when you see it, to stop transactions from happening when you see it. So that's what our software actually facilitates in the digital asset space. And so important, again, to know, looking for things like that, to know that the exchange you're operating on uses a service like Solidus Labs. Those are, again, additional things that you can look for to try to protect yourself as you think about knowing what you're investing in and only investing what you're willing to lose.
Great. Tina, how about you? I mean, in your role at the digital Chamber of Digital Commerce, right? What's your take on what these technologies can do, what they mean? Why are you so driven to bring this to fruition, and also who invests in this, right? Why are people investing in this, and why does that matter to this conversation?
Sure. So we heard about the financial crisis in 2008. I've heard a lot of people talk about that today. And for me at the time, I was in transaction banking, and my husband was a trader, and I remember him calling me from the bathroom in tears because he couldn't get any dollars and he couldn't cover his positions, and he'd never seen anything like it. And he thought that the financial system was going to melt down, and he was literally in bathroom in tears. And at the same time, we saw a number of people, families, lose everything. And a lot of that had to do with some predatory lending, mis-selling, and poor governance, right? So for me at that time, one of the things that I was working on pretty focused was mobile money solutions. Mm-hmm. So how could we bring banking services to people in communities that had a lack of access for whatever the reasons may be? And when I started to learn more about this technology and what the possibilities were to enable greater financial access, and you hear the term democratization of finance, and I know that sounds, a little hokey, but really this was a financial system that anybody could access in very small increments, not necessarily just to invest, right? So for me, the reason I'm interested in the space and the reason I think that technology is important is that it provides services, and it has the ability to provide them cheaper and faster, and removing that intermediary that slows things down and adds costs, to me, when you're looking at financial inclusion, was really important. And so that's why I personally got involved. My role at the Chamber is really to help our policymakers understand what the technology is, what it can do, but also what the risks are. And so when we're looking at putting guardrails in place to ensure that consumers are protected, that the markets are fair, that we do enable greater access to payment services, that we do so in a way that's thoughtful and that understands the technology. So we were talking earlier about, do we cut and paste from traditional finance into this new area? We already have rules. Can't we just reformat them? And I think there is opportunity to do that in some places. But I also think that this technology is materially different, and the assets operate materially different than the way that regular U.S. dollars do today, and that system does today. And so there is going to be some tailoring for that, and my job is to help those policymakers kind of understand that. Your question around who is investing, I think I'm going to reframe the question. So I don't think, for me anyway, this movement, this transition around financial services isn't about speculative investing. It's about fixing some of the problems that we have in our financial services ecosystem and our access to wealth creation. So for individuals, I think that we have had limits placed on who can create generational wealth. And I would like that to be democratized. I would like more people to have access to those opportunities. And so when people are looking at potentially investing in this space, think of it also as who's solving a problem that I think is important to solve, and how are they going about doing that? And if that makes sense to you, and you think that that will be the next Facebook that will connect people in a way that they haven't been connected before, and that's important to you, then I think that's how you need to look at this space.
Great. And that's going to be a good jumping off point. I'm going to turn to you in a second, Ben, but again, some of this may be repetitive, but we'll be looking at it from a different angle. In terms of this striking the balance between innovation and protection and the notion of regulation, what are we trying to solve for in the regulations that we do have in our financial ecosystem, and what applies to a world of crypto and digital assets, and how does it apply? What are the principles that we protect for in the current system? Do those translate into a future system, a current or future system? Do we have to come up with something that's different, or do we just have to tweak what we have, or some things just inapplicable? So, Ben, I want to turn to you. Yeah, I want to read a quote that you, I thought was really striking, and it touches on what you're doing over at Paxos. But you said, "Our financial system is desperately in need of modernization, and Paxos is tackling this problem head on. Paxos and its regulation-first approach to building innovative products will play a central role in the revitalization of our global financial infrastructure." So can you pick up from there and share thoughts on what you mean by that, and also start with the tension between innovation and regulation, or maybe not tension, maybe some sort of a marriage that can support the growth of crypto?
Yeah, absolutely. Thank you so much for having me. So I think I want to start just by saying that this really does have transformative potential. I think there's a lot of confusion in the market right now about, you may have asked yourself, what is the point of all of this? What is a cryptocurrency for? Is this just a casino? These are the kinds of questions that, people are bandying around in their head. But the fact of the matter is, the underlying technology that we're talking about here, blockchain technology, has the potential to rebuild our global financial system from the plumbing upward. And I think it's really important that we take that step back and recognize that's where the potential is. And Paxos is really, for those who aren't familiar with the company, what we're focused on is connecting traditional financial systems to the digital asset space, and doing so in a trustworthy way. So what does that mean? Essentially, it means we work with institutional clients like big banks to offer crypto services to their customers, and do so in a regulatory first way. And the reason that's so important is that, as we all saw with Terra Luna last week, there's really the potential for this to go wrong. And so if you start with a regulatory first approach, what that means is that your providers are ensuring that the underlying assets that are being held for consumers are being held in a safe, reliable, bankruptcy remote way. And that's what we do with our stablecoin at Paxos. And so I think for us, when you're talking about striking the balance between innovation and between regulation, to us, they go hand in hand. They're not mutually exclusive. Because if you have safely regulated products, what that does is it drives mainstream adoption. It brings many, many more people into the crypto ecosystem than just the early adopters who are willing to take on tremendous risk. And when you look at markets over time, markets that have mass adoption are the ones that see the greatest amount of investment, the greatest amount of innovation. And so we think that regulation is the basis of actually driving that innovation. So I think some people in this space see regulation as a blocker to innovation, but that's really not how we look at it at Paxos. And if we do this right, then the goal is to be able to eventually tokenize, or essentially attach a cryptocurrency token to the world, all of the world's assets, and then move them at the speed of the internet. We were talking previous to this, hypothetical, if someone were to try to send $100 to India, that would take a tremendous amount of time. It would also cost a lot of money in taxes, fees. There are a number of intermediaries involved in that transaction. You may not even know when your money is going to arrive, because it takes so long to process through a system of correspondent banks. Now take the example of a stable coin, and I want to be very clear, stable coins are not all created equal. You have stable coins like Terra Luna that are not actually backed by real assets. And then you've got stable coins, for example, like the ones issued by Paxos, that are subject to prudential oversight, that always have $1 backing them at all times. So let's say I wanted to send that $100 to India. Instead of going through the traditional financial system plumbing pipes that have been around for 50 years, I buy $100 worth of stablecoin, and I can instantly transfer that in a completely safe, completely regulated, completely transparent, completely instant way to my friend in India. And they have the confidence that that asset is also going to arrive on their end. So this is just one example of kind of the transformation that we're trying to drive. And we believe that the only way to really do that safely for consumers is to do so under a regulatory umbrella.
So, I think I assume everyone here heard the first panel this morning. And if anyone's streaming in, if you haven't seen it, I would say go back and watch it. I think it did a powerful job of driving home this notion that regulation isn't bad, that it can build trust. I know that there's this pull in DeFi, right? And Kathy, we talked about this. We'll get to this in a moment. DeFi doesn't necessarily mean no regulation, but it's sort of a different nature. But regulation is there, once again, to protect, for consumer protection, for investor protection, for safe markets, for proper disclosures. In terms of different parties or different stakeholders and participants in the space, right now, do you think that there's sort of a knee-jerk or hair-trigger reaction, depending on your point of view? Is there the notion of contagion was discussed this morning, and the notion of casting sort of a generalized net across the space from certain regulators, from certain folks who are in the crypto space, from third parties who haven't made up their minds. Any of you pick it up from there and touch on that and share thoughts?
Well, I think that the media has done a little bit of a disservice, and we as the industry probably aren't doing as much as we should be to get that education out there, to have the conversation. You just heard from Ben about Paxos being fully regulated. They, in fact, have a license from the state of New York, from the other states in the U.S. There are charters and prudential regulators that are going in and doing examinations, just like the OCC. And so you saw Acting Comptroller Sue. His staff goes out to the banks that are chartered at the federal level and actually checks on their compliance with a whole series of check marks of things. Again, Paxos is a company that is going through that process as well, just like the banks do. So it's not that the entire ecosystem is truly unregulated. You also have enforcement actions by the SEC, by the CFTC, and by other state regulators as well, and attorneys general, going after those projects that are fraudulent. If we have not solved these problems in traditional finance, you still have scams, taking advantage of vulnerable populations, the elderly, the less sophisticated consumers. And so that's a huge issue, and it has become an issue also in the crypto space. And so this responsibility to do the kinds of things that, again, need to be done, like smarter disclosures and making sure that people understand the risks of what they're investing in, what the company is doing to mitigate those risks. No 100% guarantee. So there are places in the crypto industry that are regulated, that are operating in that way. And then so there has been a challenge, I think, with the way we talk about this. But there are some things that don't exactly apply. And so the space is clearly not regulated the way some wish it was. Stable coins, again, are a good example. As Ben said, there are some that are backed by real assets, dollar for dollar. Paxos also has a Pax Gold product. So again, backed by actual gold. That is not the case with other stable coins. What is, those, and some of those projects are not required necessarily to do that by law, depending on where they're operating from. And that's another challenge with the internet economy. Just because, if you're operating in the United States, you are in fact obviously subject to some regulation. If you leave the United States or are operating offshore, people can still access those products, unfortunately, but they're not really making themselves available to the regulatory system that we have in the U.S. So there's a balance as well to make sure that we don't push any of those companies out of the U.S. and out of the regulatory framework to begin with. So I'd say that's where I think some of the questions and concerns come into play. And I guess the last thing I'd note is you also have a lot of people in this space that come out of technology, that don't come from financial services. And I think that's also the birth of this space. A lot of people who just wanted to build cool things come out of the gaming world. Again, there was a lot that came out of the gaming world that has made its way into crypto. But there is a financial regulatory system. You are subject to it if you're engaging with financial products in the United States. And so that's something that, again, has become a much greater realization in the ecosystem. And we've got associations like the one that Tina works for that are really, again, furthering that conversation and making sure as an industry that we're talking about those things, know about those things, understand the details of it.
I want to dig into our risk assessment of the regulatory landscape and framework in a moment. But Ben or Tina, do you think does it materially adversely impact? I used to be a lawyer. I know Kathy did too. So materially and adversely impact is a term of art for us. Does it materially and adversely impact the ability to have a conversation with regulators of all stripes, right, across the various jurisdictions that can weigh in on crypto? And does that impede the ability to try and develop really meaningful and impactful policy of the kind that would support the growth of crypto?
So I think what is important for people in my job and Kathy's job and Ben's as well, when you're talking with policymakers, I think there's one thing that we kind of say where we have to meet people where they are, right? So everyone has a different level of understanding of the technology. Potentially, the technologists have a different level of understanding around what it means to operate a regulated, licensable business. And there's, a meeting in the middle. And everybody kind of comes to the table with their own bias and their preconceived notions, right? And going back to what Kathy and Ben both said, when you have the media only talking about, hacks or breaches or scams, they're actually a very small portion of all of the transaction activity, right? So it gives an unfair weighted bias that, this industry is rife with scams. And I think that any new technology in any new industry, if you think about the gold rush, right? Everybody, moved to the West for the gold rush, and so did the nefarious actors, right? Because there was a new opportunity. And so, this is kind of part of the life cycle of, the birth of new technology. And that doesn't mean that we don't, do something about that. But I think that those discussions can be overly weighted on the risk side, and sometimes lose sight of the opportunities. And then equally from the, market actor perspective, I think sometimes they can focus only on the opportunities and not be more honest about the risks. So I think there's just that balance there. I think the other thing to consider is that if we're looking at taking this new way to approach financial services and putting it into existing regulatory frameworks that we have, when they don't always fit, it means that a company like Paxos, who is operating a fully regulated, fully collateralized, fully backed stablecoin, and is licensed at the state level, is now being put under potential additional scrutiny at a federal level to regulate it more. Why? It works as it works today very well. It's demonstrated success. So, one of the things that is being, as an example, policy being batted around is that only FDIC-insured financial institutions should be able to issue stablecoins, and they should hold all of their reserves in an FDIC-insured bank. So if anybody in this room knows anything about Dodd-Frank or the financial collapse of 2008, you're basically taking all of that risk that you took out of commercial banks and putting it right back in there, which makes no sense. So this is an example of trying to kind of risk assess what problem are you trying to solve and start from there, as opposed to just layering on all the existing regulation that we have because it exists today. I think that's the challenge.
So then, for all of you, where do the tension points in that exist, or at least what's the current state of play when it comes to whether it's industry stakeholders, consumer advocates, regulators, policymakers? What's the level of communication? Is there, again, this sense of generalizing, or is there a real market difference between different policymakers or regulators' ability to grasp the differences? Are there areas of tension or miscommunication? What's the current state of communication and analysis?
Well, I think, Ben,
sorry, go ahead.
I'm going to suggest what I think you should say.
Okay.
What I think you should talk about.
I'll add after that.
Today, we would not be able to prevent the Terra situation from happening again from a regulatory standpoint. There's nothing regulators can do to prevent that from happening. But they could prevent the next Paxos from blooming. And I think that that's a problem.
Yeah, I mean, I think from our perspective, we actually share the same goals as our regulators. Where the tension comes in, or where the miscommunication comes in, is you're talking about new technologies. So the existing regulatory frameworks, the existing anti-money laundering schemes don't always layer one-to-one onto the technology that we have. So when we find any kind of miscommunication, it's largely around how we're talking about the technology that we're using and what our ultimate aim is. I'll give an example here with respect to anti-money laundering. So essentially the entire regulatory scheme designed to prevent using financial systems for laundering money or financing terrorism or any other illicit activity. One of the things that has always been surprising to me when I talk about anti-money laundering with regulators around cryptocurrency is that when I tell them cryptocurrency actually has the potential to be far more effective at fighting crime than the traditional methods that we use in banking today. And it's a little bit counterintuitive, because everything you hear in the media is this is where people are, executing ransomware schemes, or where they're selling drugs or laundering money. But the fact is, these are public ledgers where every transaction is completely visible to anyone who wants to see it. If you think about our banking system today, traditional banking, it's incredibly opaque. You can't see anything that's going on, and that goes for the regulators as well. And so one of the things that we're doing in our education is trying to get on the same page of what are our end goals, what are we trying to achieve in the end, and how do we work together and look at the strengths of this technology to achieve those ends, rather than immediately coming to them and saying, well, you're not able to do it exactly the same way that we've been doing it with traditional financial institutions for 30 years or however long. And so this just must be inherently dangerous technology. I think it's that conversation, and it happens across consumer protection and marketing. It happens across anti-money laundering, like I said. It happens across essentially the backing of assets. Again, talking about sort of what are you trying to get at there. Our relationship with the New York Department of Financial Institutions is 7 years old. We've been regulated since 2015. And so we've had many, many years to have these conversations. And to your earlier question, there is a real danger of all the cryptocurrency players being lumped together, because the businesses vary dramatically in what they offer, what they're trying to do, how they protect their consumers. And so it is incumbent upon us as an industry to have those conversations, to bring the regulators along, and for us to work together for this thing to actually work.
This has to be a nuanced approach, right? Because all of those, there's this tendency, I think, or it's easier to do it, to list out the goals of regulation, right? So the goals of regulation when it comes to the financial ecosystem, right? You mentioned many of them. It's, preventing crime, it's preventing fraud, it's consumer protection. But all of those are different, and all of those are accomplished differently. And is the ability to understand and appreciate those nuances, are those apparent in the conversations that you all have had with regulators, with policymakers, with other stakeholders across the board? And I'll say both in terms of their understanding of the current, let's call it near-term environment, and what you think needs to be there in the long term.
Well, one thing I'd offer on that point, again, what are the larger goals? What the U.S. did just a few months ago, President Biden signed an executive order outlining precisely this kind of macro conversation. So many countries in the world had already had, here's our digital economy vision, here's our grant, here are all of the policy goals we're trying to achieve, and every agency has a role in that. The U.S. really had not done that quite the same way, and really a lot of the conversations around the digital asset space drove that. A lot of these conversations about, is it unregulated? How do we regulate it? What authority do agencies have today? What interests are we actually trying to balance or align? And the executive order laid those things out. So in addition to certainly economic opportunity, and consumer protection and inclusion, we're talking about financial stability globally, not just in the U.S. We're talking about the U.S.'s competitive posture in the world around being the place where technologists and innovators come, because that's, of course, the future of the economy and the future of really the opportunities that we seek to develop in this country. So talking about those dynamics and national security interests around competition, around crime prevention and counterterrorism. So all of those things were laid out really to flag that there are a lot of different agencies that need to come together to understand that macro policy. Things around standards. Again, how do you secure these technologies to try to address some of the ransomware issues and otherwise? The not so much the Terra Luna incident, but I'll talk about another one you might have heard about with Ronin. The primary dynamics there had to do with some fairly basic cybersecurity practices in terms of how you manage keys and the fact that those need to actually be distributed and in different hands. There's a best practice there with respect to distributing that. And 5 of the keys were in the hands of really one entity at the end of the day. So you've significantly reduced the number of targets that someone seeking to hack you needs to go after when they're all in one place. So some of those basic things, there are other agencies that can bring expertise to bear, other companies, certainly in the U.S., that have the expertise to bring to bear too, to help everyone think about how you create a safer, smarter ecosystem and really see the promise of the things that we're talking about here. So I offer that as I don't like the analogy of a balance because frankly it means we can't have it all. And of course, in the US, we like to think we can always have it all. So it's really though thinking about what are those factors and dynamics that need to be on the table to consider and think about in terms of goals that you have.
Right. Well, it's so I want to take one of those points, this patchwork quilt of regulators or potential regulators that we have. And if you really think across the landscape, you have international versus national. You've got federal, state here. You've got Congress and the agencies. You've got all the different agencies amongst themselves, and you've got state versus state. You may even be missing one or two. So, Tina, in particular, you had mentioned we were talking about the need for clarity and also, the potential impact of delays. And is having all of these potential different jurisdictions and different regulators and the need for them to come up with a cohesive or coherent approach, at least on a lot of these points. How optimistic or not so optimistic are you with respect to that patchwork quilt and the need for a deliberate and well-timed rollout? One, not just for growth, but two, to prevent something that could have or should have been prevented by appropriate regulation? That's a two-part question.
Right. So I think in the U.S. there are a lot of policymakers, right, from the state to the federal, the agency level, regulatory, Congress, et cetera. And there is a current environment of, maybe we'll call it a bit of a bun fight or a squabble around who's responsible for what. And some of that comes from existing remit, and this doesn't neatly fit into any one agency's existing remit, right? But if I go back again, because I'm not a lawyer, right? So I'm a problem solver. And if I go back to what are we fundamentally trying to do, right? And for me, that is provide greater opportunity and financial access for people to be able to transact with each other. And if I look at the opportunity that we have on the table today, one thing that you can think about is the internet exists today, and then we build things on top of it. We build online banking, we build credit card rails, we build Amazon portals or Shopify so that you can transact. But where we're moving toward is kind of like, one of those Tom Cruise movies where it's all embedded within that internet layer. Mm-hmm. And so it removes a lot of that friction. And I know that sounds a little bit sci-fi, but there's a lot of opportunities there. So when you look at who should be responsible for making these rules, one of the things that I caution against whoever that entity is who's responsible for what shouldn't be what the important thing is. It should be what are we trying to solve for. So if it is to prevent terrorist financing and illicit, human trafficking, nobody wants that. That's horrible, right? But I also don't want to be in an environment where the government is protecting me into being poor. Like, I don't want to be protected into being poor. So when I think about things like consumer protection and suitability and who should be allowed to participate in the space, going back to democratization again, I think one of the things that I want to make sure that people still have access to is that ability to transact, to generate wealth, to do it in a way where they have privacy, and they are informed, and they have access to information to be informed about what they're doing. And I think that's where we should place our critical efforts. And I don't necessarily see that happening today. In this country, we talk about consumer protection, but when I challenge policymakers, what does that actually mean to you? Kathy used to run the Consumer Protection Authority.
Bureau.
Yeah. And so, I know that she has a lot of really amazing ideas around how we can put that in place in this industry today. And so I just want to be sure that whatever we do does not prevent, I don't want the bureaucracy of what exists today to be an impediment around what the opportunities are for us to evolve.
Kathy, can you pick up on that? Because you really were at the very heart of this, the agency that's charged with protecting consumers and understanding what you need to do in order to protect consumers, but make sure that it's done in a way that allows industry to provide products and services that consumers need. You live that day to day. Can you pick up on what Tina was saying?
Well, I think it does come from what Tina was saying too, and she mentioned earlier certainly the financial crisis and the Dodd-Frank Act that created the CFPB to begin with. So much of what we're seeing in the digital asset space now is really about trust. That came up on the first panel at the beginning of the day. Trust in institutions, concerns about institutions, the intermediaries who are, between you and the transaction that you want to engage in, and the cost involved in that, the lack of efficiency involved in that. So there really are some real opportunities here, and people, frankly, not wanting that friction. We now are in a peer-to-peer world. You think actually still there's a transaction through PayPal. We just had Larry speaking from PayPal. The fact is, I'm zipping that money there. It's not exactly zipping quite the same way it will. Certainly in the digital asset space, those who are spent their careers in payments know that. And certainly,
people can close your account if they want to.
Yes, and certainly with the way the banking system works, getting it from one side of the globe to the other is definitely not zipping right now. But that's essentially, again, getting back to the problem solving. But I think part of this is the trust in institutions and the desire to really do this, as I said, people coming back to people, interactions and dynamics, and the opportunity to choose that. And now I take it to the next thread of, again, the birth of the CFPB and the patchwork that is where your question started, Eric. The Consumer Financial Protection Bureau actually has some very specific mandates with respect to the financial products that they have jurisdiction over at the federal level. And when they were created, hugely important mission, actually financial education at the heart of kind of the broadest part of the CFPB's mission, because they can educate the consumers generally on any kind of financial product. But in terms of what they can regulate, what they can supervise, what they can enforce against, the fact of the matter is, even when the CFPB was created, the states still have that authority, the states still have that jurisdiction and that responsibility. You've got the Federal Trade Commission, you've got the banking regulators. Certainly you heard Acting Comptroller Sue talk about consumer protection. You heard Commissioner Harris talk about consumer protection. So the number of agencies that actually have consumer protection in their mandate in the financial services space is significant. It definitely is a patchwork. And so I guess that's the other thing I would add on the government side. I spent so much of my career in interagency. There are different responsibilities, jurisdictions, authorities. And so having those agencies work together, instead of in a food fight, instead of worrying about, they're speaking about it, so that means I need to get in there and assert my jurisdiction. No, it's about, again, that executive order, taking a larger step and saying, how do we reconcile these things? Everyone has limited resources. Everyone does. whether we're talking about in our households or in these agencies. You've got to set priorities. You've got to decide who's going to do which part of this. And so it really is having that overarching policy, that agreement, who's best suited, who has the best expertise. And frankly, I can tell you from our company, and I'm sure you're feeling it too, anyone you're trying to hire, a lot of competition for that talent. It takes people to do this oversight, people to think smart about this policy. And so how you weave that together and prioritize and really take advantage of the authorities that you have today, that's essentially where the digital asset space, really from a government standpoint, I think needs to be. And then the industry needs to be helpful, needs to engage, needs to provide the specific nuanced examples of where the current requirements don't quite fit. And then think about how we can do this better. And I said before, and it's still true, traditional finance doesn't have this figured out yet either. So these are all the same conversations we're having, with banks and that the regulators are having with the banks and with non-banks.
Right. Well, look, I think we're out of time, and we could go on for hours and hours, and we will, and for days, weeks, months, years, we likely will. I want to pick up on one thing before we sign off: financial education.
Oh, I was just going to say that.
Creating, and it's right in line with one of Operation Hope's pillars, but creating an environment in which consumers, investors, policymakers, regulators, stakeholders, there's the need for financial education to know what the products are, what you're buying, what's being sold, how to make sure that there's proper supervision and enforcement, but with the freedom to engage as one sees fit in a safe, protected environment. This is crucial, and again, one of the reasons why we're here today. So I'll wind up with this thought. There's a tremendous amount of passion and vision for these technologies, for this innovation, and I would say don't let the fear of what could be dull or dampen that passion and vision, but at the same time, especially for enthusiasts, don't let your passion and vision lead you to discount legitimate fears, but instead we really need to communicate, educate, and collaborate, and I think if we do that, we're hopefully smart enough, and I think we're smart enough to get to where we need to be, and 20 years from now, we'll be talking about a new technology that will be built on the foundation of what we're talking about today.
Well, I'd love to see our government focus on financial literacy instead of trying to protect people, teach people. I mean, that's what I would love to see. And everybody in this room, if you are crypto curious or you're a newbie, personal commitment to you. My Twitter handle is @TinaTaylor. My DMs are open. If you have a question, I can answer it. If I can't answer it, I will send you to somebody who can answer it. This community is open. That's the best part, I think, about the crypto asset community. There is no lack of information. If you're curious about it, you can go out and get it. So arm yourselves, educate yourselves, because I do think that there is a balance between needing to be protected and not needing to be protected.
Great. All right. Well, thank you, everyone, and appreciate your giving us a few extra minutes.